Welcome back. Still going good for the market, though the mid-cap index is now actually trading at the low point of the day. Pull out the intraday chart of the mid-cap index, and now that's up 1/3 of 1% now. So again, there's a bit of a worry about maybe some phase of kind of distribution taking place at the higher level of 8,300. In terms of individual stocks, M&M Financial is down about 3%. That's reacting to its asset quality numbers, which came after markets closed. Bharti Infratel is the other stock that's down about 3%, but it's been a stock specific market. So let's get some more stock ideas. Mayuresh Joshi now joins in from Angel Broking. Mayuresh, good morning. You like MT Educare?
Morning, Anuj. Yes, I think if you look at MT Educare's positioning within the education space, the coaching business has done exceedingly well for MT Educare. Mumbai as a city accounts for almost 66% of the overall business. And again, probably I think if you're looking at the overall centers and the locations that MT Educare is present out of, 66% of the locations basically coming from Mumbai. So clearly, I think if you're looking at the kind of growth prospects that the company is expected to deliver, in the quarter gone by, I think some muted numbers coming through on top line and even on the operating front because of the distribution of a few tablets under the unique learning management situation or the learning program, I think had some amount of toll both in terms of margin compression as well as on the bottom line. However, I think with a few projects kick-starting, including the one which Chicago made, and again I think the unique learning management solutions itself, I think poses huge amount of opportunity. So our own take in terms of key financials is that a 25% growth in terms of top line not ruled out, close to 355 odd crores. You're probably looking at an EBITDA margin expansion happening around 17.5% over the next couple of years. And clearly, I think even the government focus in terms of education is picking up steam. So the kind of allocation done in the union budget of 69,000 crores is going to aid the government projects that the company is expected to win. Though a very minuscule part at this point of time, but over the next few years, I think this segment will also gain significant traction. So will its other streams like the Lakshya program for the science vertical, its CA coaching institutions for Mumbai and the Tamil Nadu market. So clearly, I think a profitability of around 35 odd crores is what we expect MT Educare to post over the next couple of years. And even on the valuation perspective, I think at 15.5 times, we believe the stock is probably poised very, very decently. So a target of 169 over the next 12 months, valuing the company at 17.5 times is not ruled out.
Okay, but Mayuresh, why not something like an NIIT Limited from the education space? That one's also given very good returns on a year-to-date basis, 97% odd if I'm not mistaken, and compare this to MT Educare, which is given 16% returns. Is this a valuation game or something else fundamentally within the education space?
Well, clearly, I think, again, if you look at NIIT and if you look at their learning solutions, both on the corporate front and even on the school learning solutions side, clearly, I think you're talking about on the digital front on how NIIT is probably approaching this business, while on MT Educare, we're probably talking more in terms of digital plus coaching probably taking place. So I think it's a mix of both. And yes, I think NIIT has given phenomenal returns. But clearly, I think MT Educare, considering the market cap that it currently is at, I think is, in our opinion, highly undervalued. And the kind of prospects that the company can deliver with increasing locations coming through. And a lot of projects, as I'm saying, I think once they start picking up steam and traction, the margin expansion should be quite evident. So I think it's more on a valuation part that we're liking MT Educare right now. But NIIT, again, I think has shown phenomenal growth.
Okay, the second pick is JK Cement. So again, obvious question, why this when you have so many other mid-cap cement companies? Anything in particular that you like about JK Cement?
So clearly, Anuj, I think from the pecking order stance, Ultratech is something that we continue to like even on the large cap space. Within the mid cap universe, probably if you're looking at JK Cement, the kind of installed capacity it's got at around 11.5, I think, and break that up into grey and white. 7.5 MTPA probably comes from the northern area, I think, where the realizations have been extremely strong, and we'll be expecting realizations to inch up further. So with capacity expansions taking place at the rightful time, and with expected infrastructure activity and housing activity to pick up, you're probably looking at volume growth along with realization growth, aiding a lot of these companies' volumes. And again, I think JK Cement would be no exception. If you're talking about their white cement capacity, they've got a wall putty unit and a Gorton facility of 0.6. They've got a plant in the UAE of 0.6 MTP as well. So our own take is in terms of top line, we're expecting a 19.5% growth to probably take place over the next couple of years. In terms of EBITDA growth, we're expecting 34.5% to take place. And clearly, if you're looking at volumes, they had 1.8 MT in the quarter gone by, and clearly you're looking at a blended volume growth of close to 14.3%, where grey volumes are expected to grow at a pace of 16.1%, wine cement volumes expected to grow at 4.3%. The other important factor, Anuj, would be the power and fuel cost, which have seen significant deacceleration over the past few quarters. And clearly with petcoke consumption going up in a lot of these cement companies' input costs, clearly I think that is going to aid margins going forward. And with the new plants coming close to where the logistic output is, I think the freight costs are also going to come down significantly. So our take is that an EV to ton of $89–90, the company looks attractively poised compared to the installed capacity that it is sort of around 11.5–11.6 MTPA. And our own take is that the growth estimates, I think, should outperform a large part of the mid-cap universe.
Okay. Mayuresh, now shifting away from your picks, which is JK Cement as well as MT Educare, I wanted to ask you about Cairn India. That stock is the top gain on the Nifty. What are you ascribing in terms of valuations, and how much or more upside do you see?
So clearly, again, I think if you're looking at how oil prices are moving at this juncture and the expectation of oil prices expected to stay within the range, you're definitely going to see some amount of impact.
More than 15 to
happening out of the balance sheet. Point number two probably is the kind of capex reduction that a lot of these energy companies has done, being not an exception at all. So kind of oil wells that were expected to get drilled over the last 3 to 4 quarters has similarly got tapered down. And clearly that will also have an output in terms of how the output will happen, specifically from its Malmut fields. Point number three probably that you're looking at is the tax overhang, which will still continue. So I think you might see some movement happening on the stock. The valuations again are very, very attractive at this point of time, considering their assets that they've got. And if you take these assets at book value, I think the stock looks poised attractively from a valuation perspective. However, I think the core fundamentals probably are not going to change overnight. So I think the stock will remain a laggard within the oil and gas universe.
Mayuresh, a word on the top losers today, both Idea and Bharti, and your call on these two stocks.
So clearly, Anuj, I think Idea disappointed on most counts, and again, the recollection that I've got is for the telecom stocks for the better part of Q3, Q4. I think the voice RPMs are expected to remain flattish. Structurally, if you're looking at how the competition is phasing out, the kind of capex and the opex that these guys have to make, the Reliant Jio launch coming through, you're going to see a substantial amount of impact probably coming on the return ratios as well. So yes, I think data revenues are inching up for a lot of these companies, but the opex and the capex is going to take a toll in terms of the return ratios. And again, I think the MOUs, ARPUs are probably going to remain a little bit sluggish over the next few quarters. So clearly, I think in our opinion, I think return ratios remaining subdued, cash flows not improving, will structurally remain as hindrances for Idea, Bharti within the telecom space. Bharti specifically has got a leveraged balance sheet, and what probably happens with their Africa tower sale will reduce debt to a certain extent, but for that to translate into free cash flows in a more meaningful manner for both these companies will still take some time. So I think we'll still maintain a neutral stance on both these stocks at this point of time.
Okay, a neutral stance in both Bharti and Idea. Okay, Mayuresh, any disclosures you'd like to leave us with?
All the stocks that we've discussed, I do not have any personal holding, but it is possible that we may have discussed these stocks with our clients, and clients may be having holdings in the securities discussed.
All right, fair enough, Mayuresh. We'll leave it on that note. Thanks very much for joining in and taking us through all of your stock picks as well as your ideas. But it is about Idea, which is the top loser on the Nifty at this point in time. In fact, it's recovered from the day's low, but still. And Rima joins in.